Welcome one, welcome all to DeFi Crypto and Airdrops. I am Mike, aka Veteran Crypto, and this is David from DeFi University. And those of you that didn't catch our last episode, we now have a new Wednesday show, a regular Wednesday show with both David and Jake Call from Metrics Finance and Luminary Assets. Um, Both of them are much more knowledgeable about DeFi than I am. As those of you that have been watching the channel know, I'm relatively new to DeFi, only been doing it about 9 or 10 months. I'm doing really well for myself, but as far as being at the level of David and Jake that have been doing it for years, nowhere near that. So I can't tell you how excited I am to be working with these two gentlemen. David is building out a really, really good DeFi university. Uh, let's see, bring it up right here. This is it. If you're interested, is skool.com/DeFi University. I've linked it in the description of both this episode and on our channel. Our channel is DeFi Crypto and Airdrops on YouTube. And if you come here, you can click on more and it will bring up David's school right here, Metrics Finance, all of our Discord channels, our X accounts for both me and Jeff, and I'll make sure I get David on there as well. So, David, how's it going, brother?
Yes, sir. Doing well, Mike. And looking forward to talking about Pendle and some fixed income opportunities today. And I think we can also then jump into a couple of other protocols. We could talk about Contango, we could talk about Gearbox, we can talk about Morpho, and then we can discuss how we can lever some of these Pendle products. So I've got a presentation ready for everyone, man, and I'm
Dude,
ready to hop into it.
put it up because I'll tell you that the thing that I know that I am very interested in is looping strategies because it is an excellent way to lever up. Those of you that aren't familiar with what looping is, it's an excellent way to lever up your yield earning, simply by you know what, I'll just let's get into it and it will explain itself. No reason for me to get into the details of it, but the reason I'm excited about it is my strategy for this bull run is I want to ladder out, using my plan that I already have mapped out on my tracking sheet. I want to ladder out into stables, but that doesn't mean I want to be out of DeFi. Um, you know, all I plan on laddering out while the bull run is going on. And while the bull run is going on, there's going to be plenty of volume in the markets. There's going to be, here, let me pull this up. And those of you that aren't familiar with DeFi, we earn based off of volume. And so I want to make sure that I take advantage of that volume through the rest of the bull market with my stables. So, the whole time I want to be earning 10, 20, 30, sometimes more percent APY while the rest of the bull market goes on. And I'll just be stacking stables on top of my stables, waiting for the market to pull back. And as it pulls back, I can ladder back in, using the yield and not touching the principal of what I earn this cycle, so that I just have that locked in my treasury. Then I'll use OPM, other people's money, to ladder back in, as we pull back into the bear market and as we trend sideways at the bottom of the market, and basically just build a whole new DeFi portfolio for free. So with that, David, take it away.
Yeah, man. So, Mike, let's talk about how we can do, 20%. Yeah, I think my target here for these yield-bearing PTs, these PTs over here on Pendle, and LPs for that matter, my target is between 15 and 30% APY. So just let that sink in for a second. That's without taking much risk, by the way. That's without much leverage, without many loops,
Mm-hmm.
between 15 and 30% on stables. So what we're going to do today is we're going to talk through, well, how in the world do we learn how to use this Pendle protocol so that we can generate those yields? So Pendle is a the SY wrapper that we're going to talk about in a second is a new primitive. So yield tokenization, on-chain yield tokenization is a primitive pioneered by the guys over at Pendle. And what they have done is they've created a fixed income market. They've created essentially a bond market, a DeFi bond market. That's a one way that you could think of Pendle. Now, Pendle has evolved into the leading fixed income layer in DeFi. And I didn't realize this until I started writing this report, but Pendle commands over 30% of the yield bearing stablecoin sector. Now, this
Really?
TVL, yeah, isn't
That
that
that's
amazing?
substantial.
Yeah, so I did not know that prior to putting together this research here. Now, this TVL, I think, might be a little bit inflated. We'd have to check DeFi Llama to get, maybe another data point there for TVL. The
I'm
bottom
on there
line here
now.
is that,
I'll look that up while you keep going.
yeah, but Mike, the bottom line here is that Pendle is one of the largest protocols by TVL in DeFi.
Actually, that's
And
low. Pendle right now is just over 9 billion.
wow, wow, massive growth,
Yeah.
massive growth. And so the platform itself, and we're going to focus here today on stables, but
Sorry to interrupt you
Pendle,
again, but it's actually the 1 month change is it's grown by 60%.
oh my goodness, man.
Yeah.
Yeah, that's a
All right.
lot.
Sorry. Go ahead.
No, I mean, Mike, so what we're sharing with everyone is the phenomenal growth trajectory that Pendle is on right now. And it shows no signs of slowing down. In fact, I think it's likely to accelerate further. I think that we're going to see growth accelerate faster from here.
Mm,
So, what I want to talk about today is how we can use Pendle, and I want to focus on the stable coin opportunities on Pendle. Although you can, you know, uh, uh, earn fixed state, fixed rate yield on Pendle, on Bitcoin derivatives, on Ethereum and its LSTs and LRTs,
mhm,
on ENA, on Hype, on a bunch of other assets. I just want to focus here today on stablecoins.
mm,
But the Pendle protocol enables fixed and variable yield trading. So we're going to talk about exactly how this is achieved and how we can profit from this. And it allows this trading across 25 plus stablecoin markets as of right now today. So remember, just focusing on stables. And this represents a significant bridge between your traditional fixed income. You might call it FIG in TradFi, fixed income group. Um, so an investment bank might have a fixed income, division or a fixed income group. And so Pendle has really pioneered on-chain fixed income with its on-chain yield market. So
mm.
Pendle has grown phenomenally quickly and commands a significant market share of the yield-bearing stables on-chain. And we've got a ton of options to choose from. There are a lot of stablecoin markets on Pendle. So Pendle is growing. It's a new primitive and it's a fixed income layer. So that's at a very, very high level, just a little bit about Pendle. So as we move on here to this next slide, let's just think for a second about the growth that we expect to see in stables, in stable coins over the next couple of years. Treasury Secretary Scott Bessent says that he expects this on-chain stablecoin market cap to reach upwards of $2 trillion by 2028. So what he's saying is in roughly 30 months' time, he expects the market to more than 10x, something closer to 15 or 20x from current levels. So this is a growth market to be in, stablecoins on chain. These
Well,
yield bearing stables, yeah, go ahead, Mike.
Well, I was just gonna say, I mean, as far as right now, total stablecoin market cap is $273 billion. Just in the
Wow.
past 7 days, 3.5 billion has been added.
Wow. So it's growing so quickly that my data from just a couple of weeks ago is already stale. But still, Secretary Bessent is talking about almost a 10x in growth from here over the next 30 months.
Well, they just passed the Genius Act, which as people know they're paying attention. That's the U.S. Stablecoin legislation, and Trump signed it into law, which basically makes it as long as a stablecoin is backed by the U.S. dollar or an equivalent, that it is legal. So, like PUSD, Plume stablecoin, it's one of my favorites. Their ecosystem for RWAs and DeFi is growing exponentially. It's only been live for about 2 months now, and is already outpacing most other projects. But it's backed by USDC. So by default, as long as USDC is compliant with the legislation, PUSD is. Genius move by Plume. But go ahead.
Yeah, yeah, and so that's a great example of a stable coin backed by another stable coin, and there are many of them. And as we continue on through this little research note here, I do have a section in the written content that I used to create this presentation about some of the risks associated with each of these, I guess you could call them like tranches of different types of stables and different types of yield bearing stables. So, the number one most important thing when you're taking a look at these stable coins is you've got to understand that stable. If it generates yield, you must understand how that yield is generated. And if you don't understand how it's generated, well, there could be a chance that you are the yield. So we want to
Yeah.
avoid that at all costs.
Yeah, just
So,
because something is pegged to the dollar, or that it's a stable coin. What was that one that I think it was Do Kwon? What was that?
yes,
It basically,
UST.
yeah. I mean, basically, everybody got rugged. Anybody that had that stable coin got rugged. Just because it's a stable coin does not mean it's safe. You still need to do your research and find out what is backing that stable coin. That's why I mentioned that Genius Act. And the coins that are compliant with that, the stable coins that are compliant with that, although nothing is 100% safe, but even the fiat dollar isn't 100% safe. But those stable coins, you need to make sure that there is something backing them. Make sure it's not an algorithmic stable coin or something like that.
Yeah, and Mike, in hindsight, Terra Luna and UST, the incentivization mechanism, it was structured such that it could only ever go to zero. And there were some really smart guys in DeFi back then who called that out in public. And people didn't listen. Um, that 20% yield was just too attractive. But this generation of yield bearing stables bears no resemblance to UST and Terra Luna. So the sector's growth here, Mike, is really driven by Athena and its synthetic stables, USDE and SUSDE. Those products have been the core drivers of growth, I would say, for the yield bearing stable industry as a whole over the last couple of years.
Mm.
The programmable point system over there on Athena has been copied by a bunch of other protocols because it's very successful. And it turns out those points are very valuable. And if you can monetize them, well, that's just an additional source of yield. Or you can use YTs to trade your market bias on the points. So all of this creates this robust on-chain yield market. And the strategies that we can implement at the end of the call, we're going to talk about three different and distinct strategies that we can implement using PTs and YTs and a couple of protocols to potentially lever up. your exposure. So the expectation here from a bulge bracket bank from JP Morgan is that they predict that these yield-bearing stables could capture 50% of the stablecoin market in coming years, which means significant growth for Pendle's fixed income infrastructure. So
Oh,
right now, yeah, so I expect massive growth. So this 600% growth, this is projected to just continue for the next couple of years and even maybe accelerate.
well,
Um,
well,
so
as TVL flows in, to the crypto markets and on chain, I mean it is just going to grow because I mean you figure that for every dollar that's onboarded into into the crypto markets. I mean, it's just dollar, euro, whatever. It's gonna that liquidity is just gonna add TVL to RWAs. It's gonna to stable coins, to your favorite projects, new projects. That's the whole point of all this tokenization of real world assets is to basically bring all liquidity and all value on chain.
yes, and it's not just occurring on Ethereum chains with Pendle. There are a handful of Pendle copycats now on Solana. And so, hopefully we see DeFi growth across multiple chains. But I think the majority of the growth is going to occur on Ethereum chains. So that's where I want to focus my efforts for right now. Now, let's
Ethereum
take a
and I'm definitely I have a very close eye on Base, which is a layer two on Ethereum. To be fair,
right.
so real quick, Pendle has a Ethereum, Barachain, Sonic, Base, Arbitrum, BNB, Optimism, Mantle, and a Hyper EVM or Hyper Liquid.
Yep. And so those are all EVM chains, and Pendle operates across, what was that, 7 or 8 EVM chains?
9.
Something like that. 9? Yeah. So this is great. And I think that's just going to continue to grow. Now, I think that what we should talk about here, Mike, is the mechanism by which a yield bearing stable like SUSDE, for example, is wrapped and that yield tokenized and the principal tokenized. So this SY wrapper, this is the innovation that Pendle introduced. This is the new primitive because it allows for
Can you
yield.
define for me because I don't know either, and I know that there's people out there that probably don't. What is a primitive?
Sure. So, from thinking about things from first principles, a primitive would be like a building block.
Okay.
So it is a new innovation that we can then use to create all sorts of different cool products. So this SY wrapper essentially allows you to tokenize yield and split it from the principal. So if I
Okay.
have a
Okay.
yield bearing asset like SUSDE, let's say, and let's say that I am Athena and I want to distribute my SUSDE stablecoin yield bearing token to a greater number of users, a greater number of people. I want more people to hold my token and use my token in DeFi. Well, I can go to Pendle and I can say, hey, I want you to create a market for me for SUSDE on ETH mainnet, let's say. And so
Okay.
what Pendle is going to do is they're going to take that SUSDE and wrap it with this EIP 5115 SY wrapper. And
Okay.
what that does is it creates two separate and distinct tokens. The YT, which represents the yield until maturity of that SUSDE token,
But
and
only
the
if it's held to
PT.
maturity, correct?
So it is the yield, just the yield to maturity, and it trends to zero at maturity. So what you would use the YT for would be to either hedge your PT or to speculate on a points program or to speculate on future yield. So you might use the YT if you think that the yield of the underlying asset is going to increase over time, or if you think that the implied yield for the PT is going to increase over time, or if you want to speculate on the points program. so, um, so basically, what happens here is if I've got SUSDE and it is wrapped with SY, two tokens are created, the YT, which represents the yield until maturity, and the PT, which is the principal, and value accretes to it until at maturity you can redeem the PT on Pendle at par with your yield paid in the underlying. So what this essentially allows you to do is earn what's referred to as fixed state, fixed rate yield. Because
I like the
the
sound of
I, yeah, well, I mean, fixed yield, man, that's fixed income in DeFi. How cool is that? And it's referred to as fixed state, fixed rate because you have a price for the PT. And when you swap in to a PT, you pay whatever that price is, and that price is fixed. So when let's say that you buy SUSDE for 98 cents, you have locked in that fixed state and fixed rate yield. So whatever the IY is, and I'm going to show everyone what this looks like on the Pendle protocol in a couple
okay.
of minutes here. But whenever you swap into a PT, you are locking in the price that you paid for that PT and the yield, that IY on that PT.
Mhm.
So this allows you to earn fixed yield. Now let's just talk through this real quick. So standardized yield, that's the SY wrapper. The first step in Pendle's tokenization process. So yield-bearing assets are wrapped into a standardized EIP 5115 token that normalizes yield capture across all sorts of different yield-bearing stables and different types of assets, period, not just stables. So this is the first step. The token is wrapped with the SY wrapper. What
Mhm.
it creates is a principal token, which represents the principal component, stripped of its yield. So just the principal component that accretes to par at maturity. Now, holders are able to lock in a fixed yield. Now, this is your fixed state, fixed rate yield. And this
So,
is calculated. Yeah, go ahead.
real quick, David. Say that I deposited $10,000. What would that look? Or is this something that you're going to get to? Because I really want to
Oh,
understand. I want to.
I'm going to get there, Mike. I'm
Okay,
definitely
go
going
ahead.
to get there.
Go ahead. I
Yeah,
just want to make sure we get
yeah, no, there's a lot to get through. This is the meat and potatoes here, though.
there.
We've
Have at
got
it.
to
I just want to make sure
understand.
that we get there at some point.
Oh no, we're going to. We're definitely going to, and we're going to talk about specific strategies too,
All right.
because I've made a lot of money on Pendle. Pendle's great. Now,
Mm.
this tokenization flow, you got to understand how tokens are wrapped and how each of these is created, the YT and the PT. Just understand this simple flow. Now, let's talk about YTs for just a moment, and then we can move on to the next slide here. So the YTs, these capture all the ongoing yield from the underlying asset until maturity. And the YTs trend to zero as maturity approaches. So remember, you're essentially creating a zero coupon bond here when you swap into a PT, and the coupon accretes to your PT over time until at maturity you can redeem it at par with your yield paid in the underlying. Okay,
So
so
what
I
is
know
par?
that's a lot.
I keep hearing
One
that
for
term.
one,
Okay, one
one
for
for
one. All right.
one.
All right.
So that's how you earn that fixed state, fixed rate yield. Because if SUSDE is trading for, let's say, $1.17, but you're able to buy SUSDE for 98 cents, you're buying it at a discount. And then that yield component accretes to your PT until maturity. And then
So
at maturity,
would that be similar to arbitrage?
I wouldn't necessarily put it in the same bucket
All
as
right.
an arbitrage play.
I
This is
keep
this
going.
is
I don't
yeah.
want to
So
get you on a rabbit trail.
oh, no, no, all good. So Mike, once we get into the leverage, using leverage on these PTs or on the pools, the LP tokens, once we get into that discussion on Contango and Gearbox and Morpho and a handful of other protocols, that is interest rate arbitrage. So
Okay.
if we are supplying a PT or an LP, and let's say that we're earning 10%, just to keep the math easy, on a PT, and then if we're able to borrow against that PT and pay, let's say, 5% to borrow, well, that net interest margin is 5%. Depending on what the LTVs are for your supply and debt asset, you might be
Mhm.
able to loop that up, 5 or 10 or 15x. So when you start to apply leverage to a 5% net interest margin, that's how you can go from, earning 15% on a stable to earning 50% on an
So
interest rate arbitrage play.
those that don't, and correct me if I got this wrong, but those that don't understand what he just said, basically what
Yeah, I know, man. It's a lot.
no, no, I want to make sure people understand because I actually understood that. So I've been looking at looping. So basically, if you are supplying, a stable and earning 10%, and then you take out a loan against that collateral for 5%, in essence, you're getting paid to take out a loan. And then what he was talking about with the loan to value ratio is you're not going to be able to take out, and you don't want to take out 100% loan, loan to value, because you can get liquidated because stable coins do move a bit. So, and then so what he's talking about is, supply, take out a loan, the loan you supply again, take out a loan, supply again, take out a loan. That's the looping he's talking about, where you're compounding, or not compounding, but what was the term you used again?
Um, so levering. So you're
Yeah,
you're
lever.
using
That's
yeah,
it.
and
So that's basically how you lever up. And looping is, what I was just describing is it's just this process of rinsing and repeating. And each time it's going to be less and less because you're not able to take out 100%. But because of that, multiplier, then you end up, potentially making, 10x, what you potentially could have off the same amount of money. So sorry, go ahead, David.
oh yeah, and big shout out to Stephen TCG at DeFi Dojo here, just real quick, because he has a strategy called a cheat loop, which is a much, much, much more efficient way of achieving max leverage without looping, actually. And that requires that you start with a much, much larger pool of capital to invest in the first place. But if you've got the cash, a cheat loop is a great way to achieve max leverage actually without looping. And
Mm.
you could use cheat loops to create a levered bond ladder on Pendle. And so that's actually the first strategy that I want to hopefully be able to get to by the end of the call today.
We can take it. You know
But
what? I've been looking forward to a deep dive on Pendle for a while, so we can take as much time as you have, brother.
alrighty, man. Well, I've got another half hour here. I've got another call right
No,
at
no
the
problem.
at the hour at 4. So let's go ahead and what helped me most when I was learning how to use Pendle was actually using it. So it's one thing to go through and read the documents. And by the way, the documents and learn section in Pendle is extremely good. So I just stopped my screen share. I want to share a different screen here just so that everyone can see this real quick, because I know that what I've walked through in my presentation so far might be a little bit on the advanced side, but Pendle's educational resources are very, very good. These are some of the best in DeFi, period, if not the best, I think. So definitely worthwhile to go through the document section for a deep dive. You can go through, there are videos if you go through the Learn in app. And the Pendle Academy here also has some videos. And right there, videos right there. So this is very, very good, these educational resources. So I just wanted to mention that real quick for anyone who may have felt themselves getting lost in my presentation there. But let's go ahead and bring it back into the presentation so that I can continue on. I'm just looking for that tab here. There it is. Alrighty. So back into the presentation. Let's move on from the SY wrapper slide. And this is important to understand, but I feel like this might be a little bit too much of a deep dive for right now and the amount of time that we have left. The important thing to understand here is that there are risks when you are trading on Pendle. And it has to do with the liquidity band, the configured liquidity band. So if rates fall outside of this configured liquidity band, liquidity could dry up, causing greater slippage if you have to swap in or out of a PT prior to maturity. So I'm just going to leave that here before I go down a huge rabbit hole and just get everyone lost. Let's
Yeah.
hop into the opportunities. All right.
All
So
right.
there are stablecoin markets on Pendle, and I want to focus on a handful of them. We're going to start with the Athena products, and we're going to begin on mainnet. And so let's just go ahead and hop right into the Pendle protocol itself, and let's take a look and see what does this look like. So I'm going to go from education to markets on Pendle. There we go. Here we are. So this is the markets page on Pendle. And I just want to bring everyone's attention to a couple of things first. Navigation. Here we have all of the chains. And right here, all I've done is select stables. So rather than viewing all categories where you can see, Pendle supports much more than just stablecoins. But for right now, I just want to focus on stables. So I've selected stables. And I want to look at all chains, but for right now, I just want to focus on mainnet because that's where the majority of liquidity lives. Okay, so I'm looking at stables on mainnet. I'm going to go ahead and scroll down here a little bit. I've sorted by fixed APY. So the fixed APY is what you lock in when you swap into a PT. So this is your fixed yield until maturity. So when I'm looking at the markets page here, and I've sorted by fixed APY, the next thing that my eye is drawn to is the time to maturity. So here, only 19 days. Now, what type of duration am I looking for? I'm looking for at least 60 days. Here's why. Let's say that I want to create a PT portfolio using
Real,
stable coins.
real
Yeah, go ahead.
quick.
Mhm.
Your screen looks different.
Mike, I think your audio video froze there for a second.
There we go. I got YTPT, but not LP.
Oh, yeah, sure. So all I did was up here in the settings, I am showing LP APY and implied APY. So
Oh, there we
that
go.
should yeah that should bring it up. Alrighty. So the first thing that I like to do is make sure that I'm looking at the chain that I want to operate on and
Mhm.
that I've filtered just for stables and
Okay.
sorted by fixed APY. After I've done those three things, the next thing that my eye is drawn to here is, of course, the underlying asset itself, but also the time to maturity, also referred to as duration. So what I'm looking for is at least 60 days to maturity. Now, the reason why I'm looking for 60 days to maturity is here, think about it this way. You're operating on mainnet where gas can be expensive. And let's
Yes.
just take a look. Yeah, really expensive. So let's take a look at this top stablecoin just for a second here. I'm going to click through to this PT. And so once this loads, the first thing that I want to do is just take a look. I've got APY. This is the yield on the chart here. The
Mhm.
green line is your IY, your implied yield. And that is what you lock in when you swap into a PT. The blue lines down here, this is the underlying. So the underlying asset here is SYUSD. So staked YUSD. This is a yield bearing stable. It has an underlying yield. And you can see that here with these blue dotted lines. The fixed or implied APY is this green line here. But this is an hourly chart. I want to zoom out. Let's zoom out to a daily. Okay, let's zoom out even further to a weekly. And so, a couple of important things to know about just this chart here so that we all are on the same page. The implied moves inversely to the price of the PT. Remember, these are like bonds, basically. So, yield and price move inversely to one another.
Okay.
Now, another thing that we have to know is what is the mechanism by which this implied goes up or down? Well, it's all based on market participants here on Pendle, supply and demand. And because Pendle is the only AMM market for these PT and YT products, what that means is if there is demand to swap in to this PT, the only place you can do it is on Pendle. And when you swap in and buy a PT, it will push up the price of the PT, which pushes down the yield. So when people buy PTs, the implied can go down. When people sell PTs, the implied can go up. And so, as we've seen ETH rip higher, a lot of market participants on Pendle have been exiting their PTs prior to maturity so that they can take that cash and probably go and buy ETH with it. So, what that's done is it's created some amazing opportunities right now on Pendle where yields are quite a bit higher than they were even just a few months ago. So, 18.4%, this looks great, right? Here's why you would want to avoid this. The maturity. It's only 19 days until maturity. And so what you can actually do is you can determine how much you would earn, what your gain would be on your invested capital at maturity. And let me show you how to do that. Right here in the input tab, we're going to change this from SYUSD. I'm just going to say that maybe I want to swap into this PT using USDC. And so maybe I want to swap in with, let's say, 1,000 USDC. Now, what Pendle is going to do here is down here, it's going to give me an expected gain at maturity. So you see right here, a 0.87% gain at maturity. Now, why is that so low? Well, because this matures in 19 days. So think about this. If I'm operating on mainnet, and my position size is 1,000 USDC. And I've got gas on entry and on exit. And I've got minimal slippage on entry and zero slippage when I redeem at maturity, as long as I hold to maturity. So I've got gas on entry and exit, and I've got slippage on entry. And my expected gain is 0.87%. So the gas fees alone could eat most or all of my profits if I'm swapping into a PT with only 19 days to maturity and if my position sizing is too small for the chain that I'm operating on. So just keep those factors in mind. I
Gotcha.
look. Yeah, so I look for PTs that mature 60 days out. So why don't we take a look at what something like that would look like? Let me just go
All
back
right.
here, and here's
What about
PUSD.
YV GHO? Oh no, sorry. Go ahead.
Oh yeah, yeah. So this is over on Balancer. This is I think this is one of the Falcon products. This USDF.
Oh
And so
yeah.
USDF, yeah, USDF is mintable against all sorts of different collateral. But yeah, let's take a look at this one. So I'm going to click through to the PT, and this is, it looks like a balancer pool, which is, these balancer pools are pretty great for stables. So I'm just going to go ahead and zoom out to a daily. Now this matures 166 days from now. So let's go ahead and say that I want to swap into this using, oh, it looks like I can only use these tokens here. So I would have to
Now, do you have to
have,
use all of them, or just can you use just one of them?
so I'm pretty sure that on Balancer, you can deposit any of these three tokens
Mhm.
into a pool. And then once you have that LP token, I bet that's what you use to swap into the PT here.
Okay.
Um,
Okay.
Now, there are a couple of protocols that have API access to Pendle's AMM, like Contango and Aave, for
Mhm.
example. I think that Morpho and Gearbox might be working on it. I haven't seen it there yet, but you can actually swap in to these PTs and lever them up on Contango all in one batch transaction using a flash loan. So very efficient way of using a lot of leverage. But why don't we just go back here and select a different one so that I can show you what it looks like for something that expires 60 days from now.
Gotcha.
So let's use USDC once more. And this time, instead of 1,000 USDC, because I think that on mainnet, that is too small of a
Yeah.
position, just because gas is expensive, let's just say $10,000 instead. Okay, so we're going to get an expected gain here in a second, 2.36%. So for me, 2.36% on stables over the course of 61 days, that's phenomenal. Now, what you can do with this, though, is you can lever this up. So if you know that you're earning 15% on your PT collateral, then all you got to do is find a market where you can borrow for significantly less than this and then loop it. And that's how you can get to 50% on cash on stables. And let me show you how to do that, Mike. So I'm going to stop this screen
Please
share,
do.
and yeah, we're gonna
Well,
we're gonna
you shouldn't need to stop the screen share. You should just be able to select the share this tab instead at the top.
well, yeah, but I need to restart my browser because I gave it permissions for the first time to be able to
Oh
screen share
God.
today. And I didn't want to restart and jump back into the Zoom room. So let's see here. I'm looking for Contango. There's Contango. Alrighty. So Contango is one of my favorite trading protocols. Um, but what I use it for is not just trading. I use Contango as a screener. So here I'm going to start by clicking on the simplified tab, this little simplified button. And then the next thing is I want to make sure that I'm looking at USD, USD opportunities, so stablecoin opportunities. But notice there's Bitcoin opportunities using, not just PTs. This is all different markets here for Bitcoin, for AVAX, for Matic, for Ethereum. Alrighty, but we want to focus on stables for right now. So the first thing is click on Simplified, and then click on USD rates. And then from there, I want to give it a minimum amount to invest. The reason why I do this is to remove all of the opportunities that are illiquid. So I'm looking for something that has, maybe something like 50,000 in liquidity at a minimum, not because that's the position that I plan to enter, but just because I don't want to take a look at an opportunity that's got $1,000 in liquidity. that would not be something that I would look at. So now that I've done all of this, clicked on simplify, clicked on USD rates, put in my minimum amount to invest, I've got the max or the minimum return on equity, which could be thought of as your um, effective APY on your invested capital until maturity. You could think of that as your ROE. So now what I'm looking for is the underlying asset itself, RLP in this case. This is a PT, but more importantly, I'm looking at the maturity cycle. So for SEP, so that is, not very much time. So I would pass on this, but just take a look at these max ROEs that you can achieve. Now, ROE is effectively your APY on your invested capital until maturity. So imagine doing 62% on a stable. That's pretty phenomenal.
Yeah.
So let's continue to look here. Again, we're looking for stables and we're looking for stables that are PTs. We're looking for PTs, but we're looking for PTs that mature, 60 days from now. So 25 SEP is not quite enough time, but let's continue looking. Now, another thing that I'm looking for here when I'm taking a look at these opportunities on Contango is, are the collateral and debt assets correlated or not? So, um, you could say that a correlated pair would be something like an SUSD PT, where you're borrowing USDE to lever it up. That would be a correlated pair. Or if you're using, like in a resolve market, you would supply wrapped staked USR and then borrow USR to lever it up, something like that. So correlated assets are safer than non-correlated assets. And that's makes sense, right? Because if your debt asset and your collateral asset are from the same protocol, well, then if one depegs, it's likely that the other could also.
Mhm.
But if the assets are uncorrelated, if one depegs, it may be less likely that the other depegs. So let's continue on. And once we find something that looks interesting, then we can talk about more of the risks associated with using leverage here on Contango with these PTs. Okay, so 25 SEP, not enough time, not enough time. Want to keep looking here. Let's see. So supplying USDE, borrowing USDC on Euler. Okay. Another thing that I'm looking for here, Mike, is what is the money market that I'm going to be operating on? So I like Euler. I like Aave. I like Morpho. I like Gearbox. Those are all great money markets. Silo's not bad. Um, there are a handful of others, but those are the largest ones. I like to stick with Euler or Morpho or Aave. Now, just scrolling down here, TUSDE, borrowing USDT, 25 SEP, not enough time. Okay, so here's something in November. Now, this gives me a great opportunity to talk through volatility on the collateral side. So, CUSD0. This is compounding USDO, I believe. So this specific asset is quite volatile, or at least it was. I haven't taken a look at its chart recently. So in order to find a chart of CUSDO, and that's something that you need to do for every single one of these stable coins before you really continue the research process. You need to see, does it have a history of depegging? What does the peg look like? Is it yield bearing where it just goes up and to the right over time? What does the chart look like? So to find this CUSDO chart, that can actually be quite difficult sometimes, because if you just type in, to Deck Screener, let's say, CUSDO, you may not get the correct asset. So what I like to do here is just head on over to uh, Pendle, and in the search bar, I know that I'm not sharing my Pendle screen right now, but let me just go ahead and share that Pendle screen so that I can
Here I
walk through
oh
this.
good.
Yeah, so I can walk through this entire process here. So let me go ahead and stop that screen share, and let's take a look over here on Pendle. So see this little I button? And all I did was in the search bar, I typed in CUSDO. Here it is, 19 November, same as what we were just looking at over there on Contango. What I'm looking for is the I for information. I need to find the contract address for the underlying CUSDO token. And I can do that here. So this is another interesting item, the Penco system. So this is where if you swap into a PT or an LP, you could then take that PT or LP token and supply it as collateral on these protocols. I want to just point out one of them. So term max, haven't mentioned this one yet. Term max is really interesting. They use an auction system to allow you to borrow at fixed rates. So just let that sink in for a second. So if you can lock in fixed yield on your PT
Mhm.
and then borrow at a fixed borrow cost on
Mhm.
term max, you're essentially locking in a gain as long as you hold to maturity and as long as there's no DPEG. So this is
Yeah, because
really,
I
really
mean,
great.
the targets on each of them aren't moving, whereas, the usually on a lot of stuff, the APRs or APYs are always moving.
Yeah, so on your collateral side, if you've swapped into a PT, that's fixed. But if you borrow and you
Mhm.
borrow, at variable, then that's moving. And if
Yeah.
your variable borrow exceeds the yield that you're earning on your collateral, then you're in a losing position
Mhm.
and you would need to unwind that position. So right here, you see where it says specs? That's what I was looking for. And what I'm looking for here are these contract addresses. So I need the contract address for the underlying asset. I'm going to copy this here, and then hopefully Dex Screener will bring up the chart for this. Sometimes, for whatever reason, it doesn't load. I don't know why, but I did find it. Great, and I'm just going to go ahead and share what this chart looks like just real quick, so that we can all be on the same page here, because this is all part of the research process. There's a lot of research that goes in to determining an opportunity. Oh, did I just share the same page again? I think I did. Yeah.
Yep.
Let me share a Dex Screener instead. That's what I'm looking for. Over on Dex Screener. Great. So here's Dex Screener. And remember I was talking about volatility? That is volatility right there.
Yeah.
So this is a stable coin. Not supposed to be moving up and down like that. But some of these stables are more volatile than others. And so one of the steps that is always a part of my research process is grabbing the underlying asset contract address, throwing it into Dex Screener, pairing it with a stable so that I can see what it looks like. I need to see what the chart of the underlying asset looks like.
Mhm.
And I need to determine, okay, has it depegged? And if so, when? And by how much in percentage terms. And there's a reason why I'm looking for those DPEGs, either to the upside or to the downside. Let me show you
We
why,
don't want
Mike, over
to
here.
liquidate.
Right. That's exactly right, man. I'm trying to avoid that. So
Yeah.
let's hop back in here to Contango. And let's just say that, maybe, we're comfortable enough with this CUSDO product. We're comfortable enough with it to, lever it up by borrowing USDC on Euler. And this is a 20 November maturity. So let's just say that this is an interesting opportunity. CUSDO would not be my first bet here. I would go with Athena. I would go with SUSDE, and I would be looking for SUSDE collateral and SUSDE PT borrowing USDE or USDC or DAI. Those are, or you could even borrow USDT if there's liquidity to do it on Aave. But there are a lot of opportunities out there right now. Wrap staked USR, borrowing USDC, not much time to maturity though. So let's just click through and take a look at this specific pair on Euler. I'm going to click create position. Now, after I've clicked create position, this is going to load. By default, it's set to max leverage. And the investment amount is set to that $50,000 figure that I used as a filter when we were just beginning to go through the opportunities here on Contango. So a couple of things that I want to point out here. Notice liquidation buffer. This is really, really important. So at max leverage, my liquidation buffer is 2.53%. And remember, the depeg can happen on the collateral or on the debt asset. It can happen on either of these. So if my debt asset, if my collateral asset depegs to the downside and my debt asset doesn't move, then if that depeg is greater than my liquidation buffer, and here's a great thing about Contango. Not only does there need to be a depeg for you to get liquidated, but Contango uses 3 oracles for these markets. And so they use a TWAP, a time weighted average price from those 3 oracles. I believe it's over a 9-day period. So what that means is a momentary depeg that lasts for minutes or maybe even hours may not result in your position being liquidated because it would need to persist for a long, that depeg would need to persist for a long enough period of time to move the time weighted average price to get you depegged, or I'm sorry, to
Got
get you liquidated. So just something
So, so,
important.
so in short,
Yeah,
it uses those 3 oracles to come up with an average, and
right.
it would have to again be a sustained depeg. So if it just wicks, it might not necessarily liquidate you.
Exactly right.
All right.
And I've experienced that here on Contango with USD zero, USD zero plus plus or USD zero plus. That was the name of the token, right? From
I believe
money, yeah. So from those guys, that depegged by 15%, and it worked really really hard to regain the peg. But I never faced liquidation because I was much more conservative with my leverage. So I never use max leverage on these pairs on Contango. I always dial back the leverage. And so notice as I dial back this leverage, my
so. Mhm.
liquidation buffer increases. And so that's part of the reason why I really like to look at the charts of these underlying assets so that I can just measure and say, okay, well, in the past, this asset has depegged, but it's never depegged by more than 4%. And it's always regained that peg within a day.
Mhm.
So if I know that to be true, well, then if I've got a 9% liquidation buffer, that's actually a more conservative position to be in with only 4.95x leverage. So take a look here at the ROE next. Now, your ROE is effectively your APY on your invested capital until maturity. So I'd be earning 18.65% ROE or 18.65% APY until the 20th of November.
Mhm.
So that is a pretty great yield, I think. Now, what are some of the potential pitfalls here? Well, if your collateral depegs to the downside, that would be bad. But remember, your PT, you earn fixed state yield on the PT. So you don't really have any interest rate risk on the collateral side. You do have interest rate risk on the debt side, however. this USDC, you're borrowing at a variable rate on Euler. So if the borrow cost on your USDC exceeds what you're earning fixed on your PT, then you would have a negative carry and you would be losing. Every second you keep that position open, you'd be losing money. So with these types of positions, you make money slowly, but you can lose money quickly. So you've got to keep an eye on the markets that you're on, the money markets that you're on. So for Euler, what we would do is we would take a look at the USDC market on Euler Prime and see what is the utilization rate right now. Has the utilization rate, increased significantly in the past? Just to get a sense for whether we should expect our borrow costs to blow out at some point or not. So there's a lot that goes into analyzing these opportunities, Mike. And we're
Yeah.
just scratching the surface here, man. But it's just that time for me, man. So yeah, I just stopped my screen share there, but there's a lot. We could, I could run through this for hours and hours.
And I feel like we're kind of gonna need to at some point, actually go through this and maybe actually open a position, and maybe I'll be the guinea pig on it, because I definitely I need to learn this, because this is going to be a major part of my later on in the bull run, and into the bear market. This is going to be my strategy of how I'm going to earn yield on my treasury of stables, so that I can reinvest in new assets, new volatile assets, or new cryptos, to start building out a new DeFi portfolio. So I know you got to go, brother. I appreciate you. I appreciate everybody in the chat. We'll definitely pick this up again. I feel like that we need to make sure that we have at least an extra hour to really go through this.
I know, man. I mean,
But
I didn't get to any of the strategies really that I wanted to talk about.
mhm.
I mean, dude, I could keep going for the next 2 hours, but I just can't. I gotta run. So,
No. That's
but
fine. Yeah,
yeah.
let me know when you got some time, and yeah, let's definitely see if we can figure this out, because it's such a powerful tool, especially since you're using stables. And where we're at in the cycle, and people are looking at here in the coming months about taking profits, and you don't want those stables just sitting there, and and yeah, I mean, there's places you can put them for 5%, but you definitely want to have the option to lever up your earning, so that potentially, I mean, when come tax time, you might be able to earn enough to where you're using OPM or other people's money to pay your taxes. So anyway,
I like that.
uh,
That's a good one.
well, I appreciate you, David. Appreciate everybody in the chat. Until next time, Veteran Crypto out.
Awesome. Thanks, Mike.